What's going on, everyone? We're going to take a look at the Nasdaq futures really quickly. So on Friday we broke out, right? It was a long week for me. I really didn't do too much trading. Took just a couple of trades. I was in and out of the market. Not a long week in a sense to where I lost a bunch of money or anything. I was profitable on the week. It was just mentally draining for the most part. Maybe it's just too many hours on the screen. Maybe it's just too much technical analysis. Maybe it's too many YouTube videos. I don't know, but I needed a little bit of a reset. So I was kind of bouncing in and out of the market a little bit. Just overall wanted to get some rest this weekend. But let's go ahead and look at what's going on with the Nasdaq. So we got this breakout. A lot of people are starting to wonder, where potentially is this freight train going to stop, right? That's a good question. We don't have too much upper supply. So essentially we could still continue to go higher. If you notice on this daily chart, we've broken out of the 5-6 day distribution. Now, if you've been watching my videos, you know that I've been talking about the distribution. Distribution is nothing more than a holding pattern, consolidation, chop, whatever you want to call it. For those of you guys who are day traders, you guys should definitely still be thinking long, and you should have been thinking long. There's a lot of traders out there that I see that are don't want to believe that the market's going any higher, and you're missing moves because you're not feeling confident. You're feeling that if you take a long position or you take a long trade, that you're going to buy the top, and this is going to be the start of a World War III, and the market's going to go to zero. Guys, you got to slow down. You got to relax a little bit. You have to be cautious, yes, because of where we're at. However, you need to continue to go with the trend until the trend has shown you that there's reasons to not continue to follow the trend. We're over supply. So we're over the 5, 10, 50, 20-day moving averages. I want to give you guys just a lesson here, and this is going to save your guys' trading careers. Over the 50-day moving average, bullish. Under the 50-day moving average, bearish. What does that mean? That means that even on the red days even on red days or down moves above the 50-day moving average, let them go. If you have a hard time going back and forth, if you're not experienced enough to know, when to scalp short and when to put on a long position, just how about this? Wait for the pullbacks, buy the dip over the 50-day moving average. Wait for the pullbacks into rising support, buy the dip. That's it. That's going to save your trading career ultimately, and you'll be able to do this business for years and years to come. It's very simple, but a lot of people don't want to believe it. Well, what happens if, we go from 17,400 down to 16,300? That's 1,000 points, this, that, and the other. Sure. Is there going to be opportunities to scalp if we pulled into the 50-day moving average? Of course, but there's also going to be great areas to go long and continue to stick with the trend. Now, when we talk about where the potential on the Nasdaq 100 is I've got a top channel level up here at 17,700, right? So 17,697 is my linear regression. So we could ultimately still continue to see the Nasdaq futures push up another 250, 300 points before we kind of pull back a little bit. Now, again, you don't want to go throwing on short positions the first day breakout out of distribution. If you notice the weekly chart, look at the weekly time frame. This is a weekly breakout. So we've barely started to get this weekly breakout going. It's week one of the breakout. We've been consolidating for 1, 2, 3, 4, 5 weeks. So if you notice, this is the start of a new leg. Now, does that mean that the market hasn't been doing anything for the past 5 weeks? Of course not. The Nasdaq, is providing a range of, 500 points in a week, right? So, are you able to make money, up or down? If there's a trading range of 500 points, of course, especially when you're looking for trades, for 10 points or 20 points or 30 points, or, you're looking to take 50 points out of a trade. If the range in 1 week on the Nasdaq is up and down almost 500 points, and on, some weeks a little bit smaller, some weeks a little bit bigger, but all in all, the ATR on a 1 week time frame is around 566. So if you can't come into the market and find setups to take 20, 25, 30 points here and there, we've got some bigger problems. So again, the trend is bullish. We're over supply. Of course, you're going to have, down moves. Of course, you're going to get intraday pullbacks. Of course, you're going to have red days. But all in all, the bulls are in very much full control. Now, if you talk about, intraday, where can you short, right? Because again, it's like one thing that I'll never understand is the market's screaming higher, but people are looking for, where can I short? The market's screaming higher and they want to short every single new high. I don't get it. Like, just allow this chart, allow the bulls, allow the buyers to do what they need to do. If you do want to short, okay, and you must short because some odd reason, make sure that you're losing some areas of support. So you're going to have to go down all the way to the smaller time frames. So if you're noticing on like a 5-minute time frame, look at what would happen if potentially we lose a 20-day moving average. The 20-day moving average on a 5-minute time frame is 17,450. Potentially you have room down to 17,416. Sure, maybe it comes all the way down, maybe it doesn't. One thing that I do want to point out is when you're in a bull market or when you're in a strong market, these levels don't have to confirm. Like if we lose the 20, it doesn't have to get down here. Versus if we're underneath supply on a daily time frame, underneath the 20, the 50, the 10, more than likely they do have more follow through. The thing is, in a strong market, when you are looking for the short positions, treat them as scalps. Just get in, understand where it could potentially go. However, don't be a stiffler and get, need to get every last tick off of it. Get in, get green, and get out. Wait for the bounce and then buy the continuation of the trend. So again, could we get a pullback? Could we get an inside bar on Monday, or Tuesday? Of course we can. If you look at the 1 hour time frame, if we start to lose a price of 17,410, potentially we can back test 17,321. So we'll have room down, a good 100 points down that potentially we can play with to the downside. But once we get here to this next area of support, it doesn't mean continue to hold your short position because we're, expecting to come here or here or here or here. Now, can we come here, here, or here? 100%. But if I'm going to take a short position, let me bring my drawing tool. If I'm going to take a short position below this 5-day moving average, well, I want to sell into the area of support, wait for it to bounce, consolidate. And if it loses this area after a consolidation and a bounce, then I'll take another short position and I'll take it to the next area, which is the rising 20-day moving average. But I want to sell into support. Again, what I'm seeing a lot of people do right now is they are shorting at support, okay? They're shorting at support and they're getting bounced. They're shorting at support and they're getting bounced. So again, you want to be a buyer at support. You want to be a buyer at support. You want to be a buyer at support. You want to be shorting when we lose a level of demand. You don't want to, just start putting on short positions just because we're at a level of demand. There's a big difference. Now, what's the difference? The difference is on the smaller time frames, you need to start closing below the higher time frame support systems. So if the 1 hour chart, I'll just give you an example of what I'm talking about. The 1 hour chart, if we close below the 5-day moving average and that price is 17,410, you need to wait for the next hour candle to confirm that, and then you're taking the short position, but you're selling into, right? You're taking profits into the next level of demand. And what I'm seeing a lot of people do is when we come down to the area of demand for the first time, they're selling here versus selling at the upper supply. You sell when we break the upper supply and you sell for profits into the next demand. Stocks are going to go typically from supply to supply, demand to demand. Now, it's a lot harder when we're just over every level of supply. We have to look for different areas, potentially of where, we could take profits, because it essentially right now is a runaway train. What you want to see is a pullback into support. You want to see a pullback into support. You want to see a pullback into support. And the reason why you want to see those pullbacks into support is so when we get to those areas of support, you can potentially bounce them to come back up. You can potentially bounce them to come back up. I don't really see no imminent threat for the bulls until we lose a price point. Let me go back to the daily time frame. Until we start losing, prices of around 16,890, and that's a long ways down. Now, again, there's going to be some opportunities for you to scalp to the downside before we get there. But I don't really see this uptrend be broken until we start to close below 16,870s, 850s, and then potentially start working down to this daily 50-day moving average. So again, if you're having a tougher time, you know, buying long, allow the pullbacks to come, allow the market to, you know, consolidate a little bit, allow them to bounce off of rising supports, and then you want to go long. Now, if we continue to lose those areas of demand, let's say we come down to, you know, let's say, for example, on a 1 hour time frame, right? Let's say, for example, we come down to the 10-day moving average, and then we bounce, but we never reclaim the 5-day moving average on the 1 hour time frame, and then it just kind of trickles around for a couple of hours and then confirms the low below this 10-day moving average. Then you want to take your short position into the next demand zone. But just because we pull back doesn't mean, okay, now this is the top, I'm just going to hold this and make, you know, $1 million on the way down. It doesn't work that way. You know, stocks are going to get bounce up and down. You need to make sure you know what the hell you're doing before you get, you know, you get trapped. So if you guys like this video, give me a thumbs up, leave me a comment, let me know how'd you guys do on Friday. I would love to hear from you guys. If you guys would like to trade with me and the team each and every single day live, get access to the dozen other entry strategies that I'm using on a day in and day out basis for stocks, options, and futures. You know, you want access to the mentorship and access to the study guides, definitely join. That link is down in the description box below, and I'll catch you guys all in the next one.